Everybody, thank you for being here. I thank you, everybody. Sorry for the confusion here. This here. So my name is Rick Sadler. How is everybody? Thank you again for being here. Thank you for inviting me. I appreciate it. I'm gonna I've got a PowerPoint I'll bring up in just a second, but one thing I want to share with everybody is what I've learned through trading is one of the things is you can complicate the devil out of your chart, or you can keep it kind of simple. I think I have a pretty simple chart. It's just with some moving averages and price action, candlesticks, and that's pretty much the way I trade. There's a couple little things I do that I'll share with you. Um, so let's get started with that. All right. So sorry, I was a little beside myself on that. Logging in. Let's see, F5, PowerPoint. There we go. Look, we all, whether we trade or whether we work for a living or whether you pen for gold, it doesn't matter. Um, we're all trying to create some wealth in some way. And wealth is not always about money. It could be about your family. It can be about fishing. I mean, if you think going out and fishing every single day, which I happen to think that, every day or every week or weekend, and get to some of those really cool spots to fish, well, that may be wealth to you, and there's nothing wrong with that. But one thing about wealth, and doesn't matter what your definition is, you have to work toward it. It's rarely given to you. And even if whatever your definition of wealth is, even if it is given to you, if you don't work to keep it, you will lose it. And I, I, I truly believe that. So no matter what you do, it takes work. We like to trade. That's one thing we're working at here. I do want to remind everybody that trading is not necessarily for everybody, and that's okay. It really is perfectly fine. If you're not, cut out to be a trader, you're just simply not cut out to be a trader. That's just all there is to it. Please don't invest money that you can't afford to lose. Starting out in trading isn't it requires an education. And honestly, you pay me now or you pay me later. And I don't mean me directly, but you're going to pay somebody. It might be the market. It might be somebody you don't even know. Because remember, if you lose a trade, somebody wins a trade. If you win a trade, somebody loses a trade. So, like I said, you're gonna pay somebody. I have found it best to find a guru, somebody that's willing to spend the time to teach you. I think it's cheaper in the long run to do something like that. Um, Years back, I've been trading now for 36 years, and years back, for candlesticks, I had a guru, Steve Bigelow. I traded under him for a long time. We worked together on several projects, and without him teaching me the candlesticks, I don't think I would be where I am today. Along the way, I've had a couple other coaches, you might say. Um, and it's just very well worth it. The group that Fausto has had on yesterday and so far today, I've kind of popped in and listened to them. And I mean, all these people are wonderful. So anyway, I would like to sum up my trading to everybody. I'm a short-term swing trader. I trade for goals. For instance, if I have it calculated what it takes to double my account, I'm looking for that number. And then when the price gets to that number, I make that decision whether to keep it, to take part off, or to just close it all out. I trade price action, and I use candlesticks to determine what price action is. I claim I don't use very many um, indicators, but when you add it all up, candlesticks, that's an indicator. I use moving averages. I love moving averages. That's because I'm too damn lazy to draw trend lines all over the place. And Moving averages, well, they really are trend lines. They just kind of move around a little bit. Also, if you, um, there can be trades that happen that somebody might take, and you think, well, geez, I didn't even see that trade. Well, that's because it's probably not in your world. And when I say in your world, um, I trade with just in a small little area, and we're going to look at some charts, and I'll show you what that area is. But we're going to be looking at, price, what I call the T line, and what I call the trend indicator. I trade in that world, and most of the time, I'm going to show you some charts that I'm in that aren't necessarily in that world. But if somebody was to say, man, I just traded XYZ and I just made a killing, I'm glad for them. But if it's not in my world, I may never see that stock. So by using moving averages, I can put everything in my world. I can put that price action, what we call the T line, which is nothing more than the 8 exponential moving average, and or the trend indicator. I can put it in those moving averages, trade off a bounce off of moving average, bullish bounce, or maybe resistance bouncing off of it, headed down. And then there's ways to spread the moving averages out so you get a longer swing, something like that. I trade both long and short. I trade stocks. Um, I trade simple directional options. That's all I do. Simple directional options. I will admit I'll trade uh, 99.9 options to one stock. And the reason I do that is there's so much more money to be made. And there's timing and patience. This is one of the keys to trading. If you don't have timing and patience, I just don't believe that you're ready to be a trader. I'm not trying to step on anybody's toes, um, but waiting for your trade to come to you is important. That requires patience, and then the timing when it's ready to move. Otherwise, you sit there in it for too long, you'll get impatient, you'll start making poor decisions. I've just, coaching over the years, coaching people, I've seen that so many times. Good Lord, I've seen it myself. Okay. So, timing and patience, so very important. Um, Here's some current trades that I happen to be in right now. Walmart. I'm in TSLL or Tesla. I'm in Google. I'm in Amazon. Amazon's rocking today. Nvidia. I'm in PLTR, AMD, and some Apple. Apple's coming up really nice. These are positions that I'm in currently. Right. I just did this slide 10 minutes ago. So wanted to make sure I got that in there. All right, I want to talk really quick about some trades that are the trades that I like. And if I see something popping up on the scanner that I use, forgive me, I may run to it and share it with you a little bit, something like that. So I can come over here to this chart. Um, we can look at charts like, let's just take FXI here for an instance. You can see FXI breaking out a little bit. I can see that Visa is moving, and this is just by, the scanner that we use. So let's get back with this PowerPoint though. Let's talk about some shorting. All right. One of the short setups I like is called a blue ice failure. And um, let me, maybe I better run through my moving averages first. Right down here, that's the 200 period moving average. This is a modified 200 period moving average. We call it the dotted deuce. There's the 50 period moving average right there. This is our trend indicator. And what this does is it shows us when a stock is bullish, trending, or bearish trending. It's really, really simple. It's really, really cool. And it really helps you to be in a chart. Like this particular chart right here. See how we're sitting here kind of bearish. I mean, we did pop up, but we failed. Well, see how all of a sudden price and the T line, that's the 8 exponential moving average, is all above those green dots. Well, what happens now is, we popped up. That would be a terrific little entry area, even right here. See how we pulled back right through there? Well, even that whole candle might be an entry. See how we rallied up? And this could be an entry with a little swing until it failed. But I'm here to show you a chart, a bearish chart setup. And it's what we call a blue ice failure. And it's when price goes from a bullish move and starts bouncing or dancing around that 50 period moving average. And what I like is when we move down and we rally up, and then of course we come down like this. I like that if I'm in it. Well, this right here, that those red dots tells me it's in a downtrend based on my design. And all it is what this is it's a way that TC2000 does it automatically if you know how to set it up. Where when price is underneath those dots, it turns red, and when price is above those dots, it turns green. Well, to me, keeping things pretty doggone simple, wow, that's no reason to be long, unless you get some sort of a reversal candle pattern. Then, that's certainly something you might look at. But we all know, uh, if we move down and put in a low, let me change the color here. We go low to a high to a higher low. This really isn't long until we get over that higher high, which is, if that dot was to turn green, all right, I would be concerned and worried about that if I was in it. Here's another one that's set up. Blue ice failure. See how well, see right here, we were green and then red, and all of a sudden the bulls took charge. And now what we're going to look for on the bullish side, like an entry, is maybe right through here or maybe right through there. So that rise and that rest, I could see some buying in here, in fact. And here we pull back. I mean, right now, we don't have hindsight when everything is live, but right through there, that might be a buy. But you can see price starts to fail, so maybe your stop is below the T line. All of a sudden, our trend is going negative now. So there's what I'm looking for on a blue ice failure. That would be the entry right through there, failing that 50 period moving average. And something I like, because I use moving averages, I'm always going to look for there's enough distance between the 200, I'm sorry, the 50 down toward the 200 period moving average. And what that'll give me is profit in that area right there. Okay, on the long side, something we call a gap and a trap. For those that don't know what the 3/8 trap is, it's something we use for, that's not a very good color, is it? Um, it's something we use for an entry, and it's called a 3/8 trap. If this is probably the best entry I have ever run across in 36 years. All right, it's a mechanical entry. Um, and this is one perfect right here. What you don't see on the screen here is let me make that red, is the three, and that would be the three EMA, and the three EMA would be probably riding about right here. And the T line, that's the 8 exponential moving average. Well, there's your entry right there. So we're looking for this particular scan that I'm looking for. Um, I'm looking for that gap and then a pullback into the 3/8 trap. I'm looking for price action or the candlesticks. Notice we have a nice trend there. See our green dots. We're over the 50. We're over the 200. I think that right there is a perfect setup. Stop wise, pretty simple. Let me do this. Actually, a couple places. I mean, depending on your risk tolerance. A stop would be a close back below the T line or yesterday's low on this particular chart. And sometimes I'll even keep it all the way down to the dotted or the green dots, the trend indicator. If I have a reason to keep that particular stock, sometimes I will do that. So I kind of broke up these charts a little bit. Let's talk about my simple directional options. I tend to trade 40 days plus, open interest of at least 500 or more. Delta, I generally, just say generally because sometimes I don't, but more times than not, generally stay around a 70 delta. And by the way, a 65 delta is close enough for me. And I have been known to stray out of the money just a little bit. I have two accounts that I trade. One is a larger account, and I can pretty much trade what I want, and I can trade. Um, I mean, within reason. The amount of contracts I want to trade. The other account that I have is a smaller account, and this is what I consider my when I share with people my road to wealth account. And um, right now it's over $4,000. So it's an account that I really work to double. So times two in 12 months. Um, I've doubled this one last year. I doubled the year before I doubled it. Um, larger account. So that sort of thing is possible, but it also takes a good market. All right. I don't want anyone to think just because, you sign up for some trading, um, you're automatically going to double your account. Look, there's got to be a lot of things on your side for things like that to happen. And a good market is one of them. By the way, good doesn't have to be bullish, but good can be bearish. Um, Trending is what I want. Sideways market is horrible, if you ask me. There's another trade that I like, trade setup. It's called a rounded bottom breakout. Just quick way to describe that is I want price trapped between the 200 period moving average and the 50 period moving average. What I'm looking for is, I want it ugly. I want it beat down. And then we want the bulls to step in. And so here they step in, they pull back. I want some moving average crossover going on. Um, right through here might be an entry. We rallied up. Well, we put in that candlestick that an inside day, those are kind of the type of entry things I'm looking for. Maybe something right there. Here we hit the dotted deuce, or it's just a modified 200 period moving average. It's no secret. I share it with everybody. It's a 200. It's front weighted and it's measured off the lows of a chart. If we have time, I can detail that for you. But what I have found over time is that it acts as support and resistance. Price will dance along that line. And then, we get that breakout, then the 200 becomes a target. By the way, that is a very good target, the dotted deuce right there. Um, I want to talk about the trend indicator. Uh, this is one of the coolest things ever, and I'm going to share it with you in its simplest of forms. And by the way, any charting package has this. You just don't know it. Now, I will admit your charting package may not have the ability to turn it green or red. That is true. You may not, but you have it. Okay. So, and here's what I mean. Um, the white line is nothing more. Let's see here. White line. So white. There we go. Then the 8 EMA. That's all it is. All right. EMA. So we're just using moving averages. The green and red dots, I that's just a moving average, just so you know. Okay, it's nothing super secret, it's nothing special. It's just using two moving averages to clearly point out there's a bullish trend right there, and there's a bearish trend right there. Could we be getting started for a bullish trend? We could be, but what we want is a couple, three, four of those green dots, and then we want price to pull back for that entry. So be patient. Be patient, okay? So what that moving average is, there's two of them that I use. Um, Originally, it's the 17 EMA. The reason I use 17 EMA is because I couldn't make up my mind to use the 21 or the 20 simple. And really, it doesn't matter. Okay? It does not matter. Remember early on, I talked about your trading world? If this is your trading world, that's all you need to be looking at for long or short, right here. Are we trying to step up into a bullish area? We could be. On the other side, what we could be doing is just popping up to come back down short, right? So it's all about that world right there. Anyway, I believe this one right here is the 21 EMA. I've been coaching a few people and they've kind of convinced me to try the 21, which honestly, if you put the 17 EMA or 21 EMA, I'll bet you a great big fat cheeseburger and fries and a milkshake, you wouldn't know the difference. Just, there's your trend right there. Something else I use indicator wise. So, I do claim that I don't use indicators, but really moving averages are indicators, aren't they? They are. So I guess I do. Moving averages, price action, candlesticks, that's an indicator. Well, this is what I think my number one indicator um, as far as indicators go. I know those are indicators, but this to me is the oddball one that I use. And all it is the accumulative 4-week new high, new low ratio. And I only use it on 60 minutes. I find it works really, really good for swing trading a daily chart. And that's what I do. I swing trade daily charts. Um, so by looking at this right now, and by the way, I believe I did. I clipped this today. And so this is like, for the most part, live real time. We can go look at one. Um, and you can see we're in a clear downtrend, aren't we? Remember, based on our rules, what are our rules? Price below the T line below the trend indicator. So this is saying be very, very careful with longs. Not to mean you can't have long trades. Yesterday I bought some Amazon up 18% on 10 contracts right now. Yesterday I bought PLTR up 11 and almost 12% on 10 contracts. So right there between those two is over 6 grand, just trading price action and some market knowledge and patience and those sort of things. Over here, I've got VXX. Normally, I've got this T2123 on the 15-minute chart, but because we've been in a downtrend lately and the VIX has been popping up, I thought it wise to put the VIX on here so I could just keep an eye on it. And you can see right here, we're clearly in a bullish trend at the time that I clipped this chart. I will go look at it live in just a second to see what it is. But clearly bullish at this time. And when the VIX is bullish and this indicator is bearish, well, you really, really, really do want to be careful with entering long positions. You really do. All right, let's go take a look at this live really quick. I got to remember how I did that. Just like that, right there. There we go. So let's come down here, T2123. And so this is live. Here, let me put the SPY back up here. And you can see the SPY, we're kind of, we're putting in a little bit of a bounce, bullish candlestick, but we're still in a downtrend. So as much as you might want to be bullish, I want to say, just pump your brakes, Hoss. Just slow it down. Now, I'm not a bottom picker. I don't believe in bottom picking. 36 years of trading, I know very few people that actually bottom pick the majority of their positions, and they're still in business for themselves. I know very few people. Usually, people will run out of money, go broke, because the fact is the stock is in a downtrend. All right. So, and I'll show you how to do this using the same so simple logic on an intraday time frame to maybe go long, say the SPY or any chart for that matter. So, what I want to point out here is price is under the T line. T line is under the trend indicator. That's bearish, right? Okay. So let's go look at this on an intraday chart. Are we starting to turn bullish? Starting. I'm going to bring this to a 15 minute because I want that. See those green dots? I want that to show up right there. See how now you might be able to trade this long. And it doesn't matter if it's the SPY or if it's a diamonds or Apple for that matter. I mean, we can go to Apple, right? There's Apple. Let's look at the daily. Is the daily bullish? No, it's not. Again, that's based on my strategy, my world. Price below the T line below the trend indicator. All right. Now I can draw a trend line on this like I have right here, and we might be bouncing off of it. Yep, we might be. But I can't, although I own it, this is one of those that I broke a lot of rules, but I just felt, you know, Apple, I've been holding Apple for some time. Apple, Nvidia, I bought yesterday, PLTR, picked up some of those charts that are really beat up, looking for relief rallies for now anyway. But let's take this to that hourly chart. Is that a buy? No, it's not. So what I want to show here is mechanically, you can trade on any time frame and follow the exact same rule over and over and over. I think that it takes some of the hardships out of trading. It simplifies trading. So that is not a buy. How about the 15 minute? That is now a buy. What do we have here? Let's go look at this. So get my little arrow out, make that yellow. There we go. So here we have a little bottom put in. It's not quite a bullish engulf, but you certainly have the power up right there. See that consolidation? Could that have been bought? And notice the green dots would have been green. Price over the dots or over that moving average, so simple, is bullish. Now we look for chart patterns. There's a nice little flag. See how we rally up, and now we have another little flag. Also, what do we have? Remember that cool little 3/8 trap uh, entry that I mentioned? There you are right there. 3/8 trap entry, 3/8 trap. Oh, you know what? I'm live. I don't have it on this chart. So if you don't mind, I'm going to switch back over to here. What was that? 15 minute. There we go. Um, 3 EMA. That's all that is. Now, I use 3 EMA high, by the way. That doesn't mean you have to. I like it. But see how we rallied up? Our dots are green, and look where price is. There's price below the 3, trapped above the T line or the 8 exponential moving average. We're up. Look at, we're doing it again, right? So those become entry areas right through there. I hope that made some sense. If anyone has any questions and I have time, I'd love to talk more about that. That is just a fabulous, absolutely fabulous way uh, to set up an entry on a chart, on a pullback is what it is. Um, let's see here. This is looking at that same thing again. Let's skip over that. Here's a trending PBO, what we call a PBO. And all a PBO is a pullback up. Whoops, wrong one. right here. That's a pullback opportunity. That's all it is. So if we're looking at this chart, see how we went from red to green and see how we rallied up. See right there, there's a pullback opportunity. Here we rallied up. We're still in trend. This pulled back a little bit more than I would have wanted it to, but we closed back over the T line, so the momentum is still in place. So if that was bought here, you could still be in it. You're making money up here. Here we pull back. We're still holding trend. The green dots. We're still holding that trend right through there. So it's just by using a few moving averages, by um, you have to look for you have to be able to find stocks that are set up, and I think we'll look at something here in a minute with that. This is whoops, this is what we call a pinball setup. This, by the way, I gave up. Well, I gave up trading for about 3 months, years and years ago, because I blew my account up. Not gonna lie to anybody, I blew it up. Most of you know the story if you've been hanging around. Um, and when I say blow it up, I'm talking 50K, okay? So there's a lot you've got an answer to. You do something like that. I had to figure out a way to trade, and this is where the T line was created, developed, whatever you want to call it. Um, and I was taught, buy low, these kind of charts way down here, and ended up going broke. Reason I went broke is because, well, everybody does if that is your entire diet. Bottom picking just doesn't work. As I tell everybody in our trading room, bottom picking, it's just embarrassing. And look, if you're a dude, you don't want to do that seeing you pick your bottom. And if you're a dude that, believe me, you don't want a dude seeing your bottom, pick your bottom. So just stop picking bottoms. Here's the thing to do is wait till the stock moves over the T line. Now you've got a little bit of momentum going. Anyway, this was the chart pattern that got me back into trading, and here I am today. And the target is always the 34 EMA up here. I apologize. I only have so much time, so I can't spend a lot of time on these. And what I'm trying to get across is just, whoops, figure out how to use. There we go. A few charts that I like, chart patterns. Um, to break up the charts, there's something we have on our website, and I think setting goals is so important. And it's free. You can go to it anytime. You don't even have to give us your name if you don't want to. I can get you the link for it. Um, so and this is a slide, so I can't really do it, but you put your starting balance right here. Um, and if you want this, it's set up to show you what you need to do to double your account. So your starting balance is over here. So say it's $5,000. You want to double it to $10,000 in a year's time. That's what we're looking at. Oops, we wanted that. I wanted that green, yellow. There we go. That's a better color for that. So on average, you've got to do about, we'll call it $24 a day, or we'll call it $119 a week, or $476 a month. On average, I'm not a day trader. I don't push day trading. Um, but that's just what you have to do on average. You can also put your positioning size on here. How much of your account do you want to invest in a position? You can put that number in here, and then it calculates, if you have a $5,000 account, if you want to spend 10%, well, you put $500 on that position. Anyway, that calculator is on the website, totally free. You don't have to sign up for anything to get to it. And if we have time, I can show you where to find it at one of the places anyway. A downtrend reversal, which really is setting up for a rounded bottom breakout. I've probably made more money in this chart pattern than any over the years. In all fairness, I probably used it longer, but it is truly a wonderful, wonderful chart pattern using moving averages. Um, and what we're looking for here is a chart that's been beat down. Okay, really, really beat down. I want this thing, I want it down there. And then I want it to start to do a little price action reversal here. This, by the way, remember, 200 period moving average. This is the 50 period moving average. And all I'm looking for is price action to go from one moving average to another moving average. That's it. Now, I'm going to trade it. I'm not just going to buy this and blindly hold it till it gets there because there's no absolute guarantee that it's going to get there. This is our modified 200 period moving average. We call it the dotted deuce, and it is an amazing moving average target. It really is amazing. So I will trade this, like I say, if I get a sell signal in here, if I own this, I get a sell signal. Well, I'm not going to sit there and, with my pants down and get in trouble with this trade. I'll get out of it. Um, but overall, this has been such a winning trade when it's properly used. Uh, what we're wanting is price to move back over that 50 period moving average. And then, of course, run to that dotted deuce. I'll almost guarantee. How's that for putting a couple of catchy phrases together, catchy words together? That it will consolidate in some manner. It may pull back a little bit more. It may pop up, then pull back a little bit more. But I'll tell you what, I'll bet you every single dollar, every single day, that it will do that here. And then if the bulls catch it, and it starts catching wind, it will continue up a ways. Great, great chart. Um, we already talked about blue ice failure, so I'm gonna skip over that. Um, the 3/8 trap bullish, there's also a 3/8 trap bearish. Here's a picture of it right here. Notice a couple of things that I think maybe stand out is we're below the 50 period moving average. You can see the trend indicator is saying we're in a downtrend. And now we're in a 3/8 trap short. So what we're looking at is entering here or just below, just slightly below. And then, of course, looking for price to move lower. If it starts to move up, there's a couple places for a stop. One might be that T line right through there. And then, of course, I'm going to use the trend indicator. I love price action, so I'm going to always pay attention to price action, for a stop or for an entry as well. Um, a breakout, breakouts are pretty simple. I trade these. No, there's no magic to them really. You've got a chart that's acting really good. Here we rise. This is what we call a pop out of the box or just tight consolidation. We gap up. So now we're looking, all right, what do we do with this, right? Well, we start to break out right there. Why not? I mean, this chart this candle right there could have been bought as well. Gaps are a piece of cake. They're walk in the park. All that is understanding candlesticks. That's all that is. And following the building blocks. As long as they build, they're good. There's certain, say, candlesticks that suggest our blocks are going to tumble. It doesn't guarantee that they're going to tumble way back down here, but maybe the profits you have are likely to tumble with a candlestick like that. So we, tend to take profits in that when you see something like that. This is the scanner I was talking about. Um, we can look at this live as well if we have time coming up. Um, this is static and this is old. Okay, so there's nothing, you know, uh, updated about this. But it just tells me when stocks are in our gap and go or a bull gap and trap. This is my PBO. I just call it this differently. That's a rounded bottom breakout we looked at. There's a breakout. This is a standard trap, 3/8 trap with a 3/8 trap breakout, is what that is. But this is really nice. You can just be kind of humming right along and alerted when stocks are setting up for you. It's just I think it's one of those tools that a trader kind of needs, to be honest. Again, to sum up the way I trade, I must be coming to the end of the PowerPoint here. That's good. We have some time to look at some live charts. I'm a short-term swing trader with goals and profits in mind. I use candlesticks to help with price action. I use moving averages, trade long and short. Stocks, yeah. I'll trade options, simple directional options. So long calls or long puts is all I trade. And I think timing and patience is a killer to a trader if you don't get them. If you don't own a basket of timing and patience, you need to just run down to the store and buy a bushel of it. Because in trading, I think timing and patience is so, so important. Order it from Amazon if you want, just you just got to have it. Again, the road to wealth doesn't matter what your wealth is. Maybe your wealth is just freedom of whatever. Maybe your wealth is having a boat, a wonderful family. Maybe that's your wealth. Making money. Maybe that's your wealth. No matter what your wealth is, you have to work at it. So don't think it comes easy. It doesn't. And for those that are born into wealth, if they don't work at it, they'll blow it. So um, stay true to what you do there. Okay. All right, let's look at some real charts. See what's going on here. I think I have some time left. Uh, so let's take a look at MAN. See how MAN is starting to move up. And this is setting up for a rounded bottom breakout. And I got that alert right here. Make sure that, yep, stays on top. So man, just as soon as I killed the PowerPoint, man was a couple of them that popped up. But that's like the starting of that rounded bottom breakout. Uh, Pepsi, that's coming up on another scan that I have for rounded bottom breakouts. We can look at Cube here. But these are all setting up just the way I might want them to set up. Um, let's see. Um, Here, let's take it in US. This is setting up a nice little 3/8 trap type setup. I call them a little different sometimes. A PBO, so a pullback opportunity. And I've got breakout here. So without going in and looking inside it, we must be breaking out over that 3 EMA right there. So you can see this chart here. Let me get rid of these lines right there. Um, there we go. So you see how we've gapped up and we've pulled back into a 3/8 trap. Now, all this is a 3/8 trap right in here. All that is. You've got to be able to read a chart when you're trading. You want to wait for that right time. And here, while certainly may have looked at something here as the NUS, you have to admit that why would you want to be going long 3 or 4 days ago or a week ago? The market was tanking. So you've got to be able to pay attention to the market. The market is no good. So, while in US might have been setting up in that 3/8 trap, the market was not good. So here we are. We gap down, we pop down to the trend indicator here. Now we're moving up. Now we have a morning star signal in here. So we have a morning star signal in here, and we're over that 3M EMA, so we're putting in a little bit of momentum. The only thing I see here is we need to climb over that 817 area, and there's the 200 period moving average for a target on this, okay? MT, right there, MT. That's too far gone, so we can't do anything with that one. Let's take a look at RKT. Look at RKT here. It's moving up. Nice little, look at that trend. Here, let's clean this up a little bit. I'm going to take this off. I never have this 3 on my chart because I think it clutters it too much. But you can see right here, see how we rallied up, Could that have been a buy? Let me make that bigger. Could that have been a buy area? Yeah. So we rallied up, pulled right back. Could, you know, a buy, a buy, a buy. Yeah. See how we're up, bouncing. Well, I'm not a big just a hammer kind of buyer. I'm not really big on that. But see how we're up the next day? Could that have not been a buy? See how our trend is bullish? Let's go take a look at the market for a second. Ah, interesting. See how VXX on the 60-minute chart is starting to break down? Cool beans. I like that. But we don't have bullishness yet on this trend indicator. So I think we ought to be a little bit cautious going into the market. The SPY 60-minute chart is setting up by our rules. Yes. Um, might be wise to see if it can break out that 585.50 area first. If you look at the daily chart, you do not have a reversal yet. I want to talk about this before I get run off here. A few minutes, I think. Let's talk about reversals. I've learned a lot about candlesticks over the years, and somebody might look at this and say, let me make that a little smaller. Somebody might look at this and say, well, we're close to a tweezer bottom. I'm not going to argue with that. But that does not mean anything bullishness. Hate to say that to everyone that follows that. And I'll share with you why in just a second. Somebody might look at this, and I think it is ever so slightly a bullish engulf. That is not a reversal signal, despite what some people think candlestick signals are. Here's the thing about all indicators, say support. Boy, don't even get me started with that. So I'm not going to deny so far that that's a bullish engulf. I'm not going to deny that's close to a tweezer bottom. I'm not going to deny that that is a doji and a bullish engulf, which uh, can lead itself to a very good candle combination. But that is not a reversal signal. It's only a reversal signal if it in fact reverses. Then we can go back and we can say, look, a reversal signal. But this will kill new traders. It will just stab you in the heart is you go to a webinar, somebody says, hey, that's a reversal signal, and you believe that stuff. So what you do is you buy into it, and then what happens is, price might move, let's go green. Price might move up just a tiny bit, and then all of a sudden it rolls over, and you're wondering what the hell just happened, right? Well, that's because you're a rookie trader, or maybe you're a struggling trader, and you don't have patience. Look, let's face some facts here on the SPY. We know, I might as well get over here, right? So we know the SPY can go higher. We clearly know that. Now, um, can the SPY go to 650? Of course it can. Can it go to 1,000? Of course it can. But it needs to do a couple things first. And trying to be impatient and pick the bottom, well, that's just wrong. We already talked about bottom picking. Very uncool. So what do we need to do? Couple of things. Well, I'm going to set this up first. Put this right here. And I'm going to put this right there. And then I'm going to delete this. There we go. So a couple of things. To create a bottom, what we need is a low, a high, a higher low, and a higher high. Voila. People pay thousands and thousands of dollars just to learn that one little thing right there. Believe me, it's worth learning. I don't think it's worth spending $1,000 for, but that people spend a lot to learn that. The impatience will clobber you. Example, there's one right there. It would have killed you if you would have bought this chart long. Doesn't matter what chart is. Okay, another thing. You see that line I put up? That's the 50% retracement of this high and this low. Look, if you're trading quality stocks, SPY, PLTR, Amazon, Google, you know, all the Meta. I mean, there's a lot of good quality, and they don't have to be high dollar stocks out there, but just good quality stocks. Then you know they can go higher. So if you just allow that 50% retracement, what I mean, think of this as a great big ocean. You know, here is here's the boat. That's the boat. This right here is the ocean. There are sharks below the boat. There are sharks and they will eat your lunch. So why not wait till we climb back up into the boat and then go water skiing, go fishing, go, you know, boating, sunbathing, whatever. But let it prove itself. I think that's important. All right. I am coming, I think coming to an end here. I can't tell if there's any questions. I don't see anything. Um, if anyone would like to go see that calculator, please go to our website, just hitruncandlesticks.com. Click right over here. This is going to take you to a sales page. Don't worry about it. Just scroll down and right here it is. Okay. Um, so say you have we're at $5,000. There you go. About $24 average a day is what you need to do to double your account. About 119 a week on average, 476 a month on average. Well, what if you change that to 14,000, right? 14,000. Just you can go and do this. Put in that 14, hit enter, and that's what you need to average a day, a week, a month to double your money. Now, why would you want to do that? Well, let's go look. Okay. So, um, like I said, I bought some Amazon yesterday. All right. I bought 10 contracts. I'm up $4,300. How much money do you need? How much? Only you can answer this question. Now, can Amazon go higher? Of course it can. Are you willing to risk it right now? And I mean, this is a question I'm asking everybody that can hear me. Just answer it to yourself because you're the only person you need to answer to. Are you willing to risk $4,300 right now? Bought it yesterday. It's up. Should I take that money? Shouldn't I? All depends on you. This is the 50% retracement that I'm looking for right through here. So, you know, oh, wait a minute. Maybe what I could do is take half off the table, put $2,200 in my pocket, and then I could mess around with the other. Remember, I know what it takes to double my account. I know that number. That's something I do an awful lot. Um, it's just a way to manage your account, manage your going into um, creating wealth, I guess. So anyway, um, I'm going to call that a day here. I think I'm coming up to my time. And if you just go to the website, and this is the home page, go to the website. We do have another division, right way options, and then another division, BYOB day trading. But I think it's mine where you go to Hit Run Candlesticks, where you go to just click on this little button right there, and you can get to this calculator, which I think is worth its weight in gold. It's 100% free to you. Okay, so anyway, Falso, if you're there, I want to say thank you very, very much. Um, I don't even know. Let's see here.
Well, thanks, Rick, for coming.
Oh,
And that
there
was,
you go. Yeah,
yeah, I'm
yeah.
here.
Okay,
No
all right. I
problem.
wasn't sure.
Yeah, no, I'm
Okay,
here. Absolutely. So, everyone, like I said, just check out Rick's little offer there. And Rick, thanks for coming here as always. And also look forward to have it back on the podcast and talking a little bit with you last time. It was a great
love to.
conversation and great content as always, you know?
All righty. Thank you so much, Fausto. You take care, okay?
You too. Enjoy
All
your
right.
weekend.
All right.
So
Bye-bye.
what I'm